Have you ever wondered what a stock really is? We hear the word all the time: stock market, stock prices, investing in stocks. But what are you actually buying when you buy a stock? A stock is a share in the ownership of a company. It's a piece of that business. When you own a stock, you own a part of the company behind it. Not just an abstract concept, but an actual slice of a real world business. Let's break it down with a simple example. Imagine you and a few friends start a lemonade stand. It costs $100 to get started, so you decide to split the business into 100 shares. Each share is worth $1. If your friend puts in $20, they own 20 shares, or 20% of the lemonade stand. They're now a part owner of the business. That's how stocks work. Companies divide themselves into shares and sell those shares to investors. Now, obviously, companies like Apple or Amazon are much bigger than a lemonade stand, but the principle is the same. When you buy a share of Apple, you're buying a piece of Apple Inc. It might be a tiny piece, but it still counts. You become a shareholder. Why do companies sell stock in the first place? It's simple: to raise money. Let's say a company wants to expand, build a new product, or hire more employees. They need capital. They could borrow money from a bank, or they could sell part of the company to the public by offering shares. Investors buy those shares, and the company uses the money to grow. In return, investors get a stake in the business. So what's in it for you as an investor? There are two main reasons people buy stocks. The first is growth. If the company grows and becomes more valuable, its stock price usually goes up. That means your shares are worth more. If you bought them at a lower price and sell them at a higher one, you make a profit. The second reason is income. Some companies pay a portion of their profits to shareholders in the form of dividends. This means you can earn regular payments just for owning the stock. Not all companies pay dividends, but many large, stable businesses do. It's one way to earn passive income through investing. Let's talk about some key terms that come up when you start looking at stocks. Equity is just another word for ownership in a company. When you own stock, you have equity in that business. A share is 1 unit of stock. If you buy 10 shares of a company, you own 10 units of that company's stock. A dividend is the money some companies pay out to their shareholders, usually from profits. You don't have to do anything to earn it. If you own the stock and the company pays dividends, you receive them. And a ticker symbol is the short abbreviation used to identify a stock on the market. For example, Apple's ticker is AAPL. Microsoft is MSFT. These symbols make it easier to find and track companies. When you hear about the stock market, it's really just a giant system for buying and selling these shares.